like the first time you came to come to Startup Kuwait? Okay, nice. Yeah, let me start to explain what is Startup Kuwait. So, what is Startup Kuwait? It's a place to gather entrepreneurs, investors, talented people, and service providers, such as Mitchell, as we just had the conference, in one place. And what is our goal? Simple, we have two goals. To help in building, to learn how to build great companies, and also how to learn how to make Kuwait a great place to start a business. So who's behind Startup Kuwait? So we are just a group of people that we are really passionate about entrepreneurship and about innovation. And I just want to remind you that everyone is welcome to join us and to help us with this movement of the startup movement. So, okay, but how do we make money from Startup Kuwait? We get this question a lot. Basically, we don't make money. And this is the idea. We just want to learn from each other and get to meet each other and learn from ourselves. Okay, so, but why you're talking English? Or in Kuwait? We get this question a lot. We have three reasons. Every time we change them, but basically this is the idea. We want all nationalities to come to this event. We don't want only like Kuwaiti speakers or people who speak Arabic. And also we want to invite international speakers to join us. Such we have now Hoy, who's going to join us. The second session, he's from Hong Kong. And also we want to get exposure to the whole world. And this is why we have these awesome cameramen. By the way, they're doing it also for free. So they are Kuwaiti startup. They want to help us, and they are nice to do it for free, helping us. And this is the idea. It's like everyone is doing everything for free. Abdullah was helping us with like everything in terms of marketing, reaching to bloggers, and we have Abdulaziz Al Loughani, the next speaker, who will give us this venue with the global investment house, and all of the speakers. We just want to, spread this entrepreneurship mentality and like foster entrepreneurship in Kuwait. And everyone is doing it just like for free and just being nice. So that's it. Let's get started.
Good evening, everyone. Thank you for joining us this evening. I know it's a Saturday evening, so most of us have plans either with family, friends, but I'm sure it's also not a coincidence for all of us to be here. And we all have this concern about building a proper ecosystem in Kuwait. Well, that takes all of our courage, all of our efforts in meeting what the objective is. There are several speakers that are going to be speaking over the life of Startup Kuwait. So, we want to focus on building, let's say, sessions on focusing on certain segments within the ecosystem building. I'm going to be talking about early stage funding, but by all means, I would suggest if you have quick questions to ask on the spot. There's a lot of answers might come in towards the end as well. It's your call. We'll start with basically a macro view on what basically early stage funding is, how does it work, the investment stage where early stage funding is. We'll look at the macros of the Mantaqa regional basis, and then we'll probably zoom into Kuwait and see what's available for us. Overall, who's familiar with the life cycle of a company? Khalid? Maybe just shout out a few lines.
Well, usually most of the businesses, when they start, they have a higher probability of, they call it actually infinity stage, where business just is starting. And usually they would make revenue between $0 to $1 million. And there's another which actually starts with 7 employees, and then it goes into another life stage, which is kind of a maturity stage with 15 employees. And then it grows to the third level, which their revenues are almost between $5 million to $15 million, and then gets into a little bit of medium-sized enterprise with almost 45 plus, and they make around from 10 to 50 million. And if it makes more than 50 million, this is a large corporation.
Great. I think if I make any mistakes, please help me. Sure. So overall, the life of a company is usually, as a startup, you start with seed stage. That's people like you and I having ideas and pitching them to basically angel investors. The company goes through a life cycle of angel investors, early stage. This is where the startup idea is actually, this is where it actually begins. And as it further develops from an idea into a prototype, you get more familiar with institutionalizing the business itself. It grows from angel investors to venture capital, where you're developing the idea, to growth capital, which supports the regionalizing and sustainability of the business. And then it finally basically plateaus as it enters into a more mature stage. During the seed stage, you'll find a lot of market research being done. So ideas are being developed. Any of you familiar with Startup Weekend? No? Startup Weekend is basically, just from the name, it's a competition where you have entrepreneurs pitching ideas, and over the course of a weekend, there is intensive mentoring or further development, prototyping ideas. Towards the end of the weekend, you pitch your final presentation, but there are first, second, third prize winners, which basically is supposed to promote them for the angel network. Usually, the different sources of revenue, different sources of funding in the startup stage or the seed stage will usually come friends, family, angel investors, and more commonly in other parts of the world are incubators. These are institutions which help promote and develop a startup from just an idea and accelerate it, and incubators / accelerators, where they develop quickly over the course of 3 to 6 months to better understand what the possibilities, what the chances are of this company surviving or sustaining further on. Post the seed stage is usually when a startup is a real startup. This is when you've graduated from your incubator program, you had your first round of angel investors, your prototype, your idea is actually working. You can see signals of your product / service being in place. You've tested the market more or less on just the MVP, minimal viable product, Mitch has been speaking about. So you slowly start building together your business plan. During that stage, once you go through your funding round, you'll obviously be loss-making, and you'll have a sort of J-curve, which might last for some time. But the idea is once you're done with the seed stage, a startup stage is where you actually start building the business model.
That's what they call the death valley.
Absolutely.
Valley of death.
Absolutely. Once you hit the startup stage, you'll have a lot of, let's say, implications, lots of obligations that will be coming in as a business, rather than in the seed stage, it's just an idea which is being developed. Again, the funding sources are usually through angel networks and early stage VCs. We'll be talking more about each stage on the funding round, what's available regionally or as well locally in the coming slides. The next stage is usually the development and expansion stage. This is really when a company has already proven its viability as a product or as a service and has entered a stage where it's requiring capital, growth capital. What we mean by that is it doesn't necessarily need to be in a profit-making mode, but the actual top line, the actual revenue has been building up, the actual eyeballs on the product, on the service is there, the actual, let's say, business is already existing and it's catching a lot of attention, it's becoming viral. And this is where you start regionalizing your business. This is where you start institutionalizing, if I may say, the business. And in most cases, it's usually funded with late stage venture capital funds. We'll go into further details in a little bit on the possibilities or some examples that are available regionally. The next stage is basically the financiers. We were talking a bit earlier on each stage, the 3 stages of a startup or early stage funding, and who are available. I think we'll start maybe over here with incubators and accelerators. These are programs, most of the time are developmental funds. Most of incubators, accelerators do not make money for, say, on the service being provided in terms of a management, in terms of fee structure or so. They're usually equity positions within the company. If X is starting up a company with an incubator, the incubator would usually host him or her with support services that they provide, from technical to strategic, mentoring, etc. And in return for all that support, they will be getting equity positions within your company. Once an incubator basically qualifies or graduates a portfolio company, one of the benefits it also adds to the company itself is promoting it for the next round of financing, which is usually done through angel networks or angel investors. These are sophisticated serial entrepreneurs who've gone through the whole 9 yards for several times and also believe in innovation and entrepreneurship and are willing to share those success stories, their experiences with entrepreneurs in the next round. And there are typical term sheets associated with angel investors, and it's usually, again, a funding round. There's no cash out usually. For the entrepreneur doesn't exit at the angel round, but actually requires further capital for further development and prototyping his or her idea. Once you finish an angel round, this is where basically the company starts getting a lot more serious in terms of institutionalizing the business and growing. These are early stage venture capital funds. In other parts of the world, in more developed parts of the world, these segments within funding rounds are actually existing. It doesn't happen by chance. Early stage VCs tend to focus on early stage venture funding. This is usually as well done not as a cash out transaction, but as a cash infusion in a portfolio company. As a cash infusion in the portfolio company. Once a company further develops and basically looks at the late stage venture capitalists, these are usually bridging gaps between a portfolio company that is not so mature for the private equity, for the strategic players to actually jump on, and takes it further to the next level of maturity within the life cycle of a company. Well, that's where usually late stage VCs come in. During the process, an entrepreneur / all these investors, 4 rounds of investors, are usually looking for exits as well. And this is typically how the shareholding pattern looks for a typical portfolio, a typical company as a startup, where you have a majority of ownership in the founding team, and that majority is actually slowly diluted because of the funding rounds, where you'd have better terms, if I may say, executed in the follow-up rounds that you get. On exit side, it's usually through strategic or PE investors. This is where the Googles, the Yahoos, and other industries look at your portfolio company, where it's qualified enough to be integrated within their platform. This is when PE players look at the company, eyeing the next, let's say, IPO that they may have as well. In terms of structuring on the shareholding pattern, there are part of negotiating, if I may say, your funding round also requires your understanding as an entrepreneur, the kind of instruments, the kind of tools that you have for funding your company. Now, a lot of these don't exist صراحة في Kuwait or regionally as well, but you'll typically have 2 types of funding, either through debt or through equity. And within equity, you'll have different instruments, which in majority of the cases protects the investors from not having a majority in terms of shareholding pattern, but exercising their control through different share classes, through different rights, if I may say, in the funding round itself. Debt is also another common instrument in funding, in early stage funding as well. And you'll find a lot of term loans. These are different types of instruments over here, but the general idea is to put pressure on the entrepreneur in meeting deliverables which he or she has with its financiers. And in some cases it also helps that shareholding pattern as well. To say your pre-money valuation is $1 million and you require a $2 million round, basically financing. For your post-money valuation is your post-money equity in the company, if you own 100% pre-money, is going to be a 33%. Well, that's basically a minority position, and the alignment of interest with the entrepreneurs or founding team members might not be so much witnessed. So the idea is to go through whatever the investor can provide you with in terms of equity that meets that minimum vested interest in a company, and the rest would usually come in the form of debt, whether it's through mezz financing or acquisition finance or secured, etc. debt. The main idea behind having this kind of shareholding pattern is quite honestly the alignment of interest. Without having all stakeholders aligned, stakeholders meaning the entrepreneur or founding team that's managing the company, the financiers and the regulators, if all three do not share that common interest, it will be very hard for a portfolio company to achieve basically its goals. But more importantly, it's the control. And this is where in a lot of developed markets around the world, venture capital as an asset class, this is why they always have minority positions. Control is key, and rounds of financing are key.
Please, I need to cut you off a little bit. Anyone have any questions? Okay. Huh?
Yeah, go ahead.
Yeah,
Just wondering how long it takes from going from the incubator accelerator stage to the, let's say, the late stage VC, and what is the success rate? How many out of 100 companies, how many are going to make it that far?
Despite whether you look at it from the G20 summit, everybody's talking about startups. If you look at regional, politics, everybody's talking about startups. We're also not naive to know that a lot of startups fail. I'll start where you left off, Mijbil. In this part of the world, the percentage is actually quite high. And you're talking, from at least in Kuwait, from the developmental funds that are available, you're having between 30 to 40% of startups being financed that are actually successful. In other developed markets, it's a lot less. It's actually less than 10% in lots of cases. The first question that we had is the life or the time horizon between incubators and late stage. They actually may vary a lot, but in more developed market, let's say, you'll find this actually taking not more than 2 years. There are some accelerators which kill ideas in less than 6 months because they validate the opportunity, they validate the service product offering that you have in the market so quickly, and it basically is much better for the entrepreneur as well. To answer your question, in some cases less than 6 months, but max until you reach the late stage VCs are usually 2 years.
So basically you should theoretically find out very quickly if you have product market fit or not.
Absolutely.
If you don't, you probably won't make it past Angel. Otherwise, you have a good chance to make it.
Absolutely.
Okay, I want to ask a question. I didn't introduce you very well actually. Did you know Aziz? He's one of the partners, what do you call him, co-founder of Talabat.com?
Yeah, I was...
So, okay, let's take it simple. Now, what did Talabat.com do? Like, how did it start? How much money they raised in the beginning? You know all of the story, right?
Yeah.
Yeah, brilliant.
All right. I'm actually not a founding partner of Talabat, but close friends in Douaniya established the business in 2004. And back then, I think your quite familiar with how internet penetration rates were in Kuwait, or
Which
how
year was this?
2004. فدidn't, يعني a lot of these building blocks are not there in our society, in our community اليوم. فcompanies' maturity is not necessarily dependent on these building blocks. The guys were very passionate about tech and the service being provided. In 2007, we thought, myself and a partner, thought of acquiring a majority position in the company because we felt most of the effort during this period itself, this actually took maybe 3 years actually for them to validate their
How much
market.
they spent money?
12,000 KDs.
For 3 years?
12,000 KDs is how much money was invested in the company.
Okay.
This again, you had revenue, which is basically being recycled into the company, etc. We acquired the company, a 90% position in 2007, and I was the managing partner for Talabat until late 2010. During that process, we also went through a lot of funding attempts, if I may say. I was writing an article on Startup Kuwait. وصراحة we were very frustrated with the local funding, if I may say, whatever is available in the local market. And we definitely believe that revenue is our best source of funding back then. طبعا it's not in realistic terms. But يعني على المارket availability, funding, revenue was our best source of funding.
So when you entered, you put the money, but you bought the shareholders out? So and you took 20, 90%?
Yes.
Or you put the money for the company to grow?
No, it's not a typical
So
VC
you
transaction.
buy them out, you
Yeah.
went inside,
Yes.
and then you started,
Yes.
until you sold it again.
We sold it in late 2010, and يعني I think we quadrupled our revenue in 3 years تقريبا. There was a lot of work being done. I know it's out of the topic, but it's not the typical transaction. I want to answer Abdullah's. I think Abdullah's hinting on, did you go through this life cycle or not? We didn't go through it. لأن these don't exist real quick. Well, this is the key.
What should the startup do now? Like, let's take Faisal. Okay. He has a startup now, and he spent his own money without going through any of this, all of this. What should he do? Like,
I think if we move on to the next slide, a lot of it will be answered over there. And this is where we take Asif, تفضل.
I have a question, but I don't know if there's a real answer for this. Locally speaking, or specifically speaking in Kuwait, what is, in your opinion, the best way to target and attract angel investors?
Angel investors actually exist صراحة عندنا في الكويت, and you need to educate them more. Not all of them are familiar with the concept of venture. Not all of them understand how venture-friendly a company is supposed to be. بحكم their background and how they were merchants or traders, you'll find them to be really greedy. For they don't share a lot. It's a trade-off for them. They don't look at it as a development. It's not a support function, مثل ما it is in the States or in Europe. It's more of a trade-off. But they do exist.
Can't you understand angel investors, Abdulaziz, when they become, like you said, greedy? Because the investment inherently here with the young entrepreneurs by itself in its nature is very, very risky.
I don't
Sometimes
think-
too risky.
I would
So
agree.
Can't you understand where these guys are coming from?
All right. Let me see a show of hands. How many of you think you can start a company and do at least $50,000 in net profits post year 2? Yalla guys, that way you have some self-confidence. But the idea is, I don't think our economy is that much of a challenge for us to actually produce $100,000 in bottom line. This is where the idea itself, or the startup itself, is not venture friendly. You find there are 25,000 at least SME licenses في الكويت. إذا عرفنا on إذا تم تعريف SMEs as say companies with capital of less than 70,000 KD. Of these companies, the conventional sectors that we have in Kuwait are not so much they're not so much venture friendly, if I may say. And when we say venture friendly, we're mainly talking about the scale that can be actually achieved from the startup that we have. I actually wouldn't say that it's very hard for angel investors to let go of some money. وبعدين a startup doesn't necessarily need to be our definition of a startup is 100,000 KD's startup, which shouldn't be the case. يعني اليوم you'll find the best apps موجودين online, and I'm talking the best apps cost less than $150,000. That's from 6 to 12 months research and development with the best prototyping team وback end to front end programmers. Startups or angel investors don't need to look at big size tickets. And it's as simple as $50,000 checks. I think there was, I hope I answered the question, Busaud.
Yeah.
But I think there was another question over there.
I have a question regarding, you mentioned something about the pre-money stage, and I was just wondering how is that elaborated in actual practice, about how is company valued, and how is it that they value how the company's worth compared to how much to invest in it at the pre-money stage. How does that work?
The valuation process itself, or how do you evaluate how much money do you need as a startup?
No, like when an investor looks at the company, and then you said that if a company, an investor comes in and they invest like $1 million or something like that, that pretty much at some stage you give an example of the percentage dilutes into like 33%. I don't know if you can just maybe elaborate on that example, that how is the pre-money process of evaluating how much money will be put, and how is that percent, came up, how does it work?
I can further.
Come up to the example which you mentioned.
I can further discuss the tools and how they used. But maybe we can take that offline if you don't mind. Yeah. But the idea is to always keep a majority of the company or a significant minority of the company with the entrepreneurs or founding team. Sorry about that. If we zoom into this part of the world, let's look at. We'll start with some general stats on SMEs loans to total loans in the MENA region, and you'll find that, the regional mandate of banks toward SMEs, all of that, صراحة cliche, is not really existing. لأن you have the highest point you have is with Morocco. From the total loans, you're looking at 23% تقريبا that are basically for SMEs registered. If you look at Kuwait, we're somewhere in 2.5 or 2% from the total loans of commercial banks that you have over here. But the actual statistics don't support venture fund. حتى if you look at the debt tools that we spoke about earlier, even if they are provided, they're on a much later stage for portfolio companies. But I think there are pros and cons for having that. And if you look at the pros, today in the venture community or in early stage fund, there's a great pool of talent. And we're not just talking about Kuwait. Our local entrepreneurs should not always look at funding sources bil Kuwait. لأنه حرام. As a matter of fact, even if you look at ideas, think big. The cost is minimal. Scale is key for a venture transaction. For the access to a great pool of talent, there are great, huge amounts of liquidity available. Just look at the examples we have in Kuwait from the developmental funds, say like Kuwait Small Projects. I don't think you can get a better deal as an entrepreneur than Kuwait Small Projects if you manage the money well. This again comes at the cost of mentoring or guidance, which is not available. There are improving.
2 more minutes.
Okay, great. There are improving cross-border trading regulations in the region, the mindset, all the regional governments are supportive of entrepreneurs, even the local ones. The cons are there is a very low number of success stories. But that's a challenge for all of us. So that's why we need, and when we mention success, and with all due respect to, we're not talking about making $100,000 in bottom line by year end. For us, I think we need to think a lot bigger in terms of scale. If you want to be the next local shop doing X, Y, or servicing X, Y, that's your choice. But what we really want to look at is better success stories than we have over here. There are structural challenges. I think your question earlier about how do you manage the structure, we'll tackle that offline, but there are challenges to look at. There are limited access to smart money, if I may say, which is a key challenge اليوم. Exit challenges are also over there. In Kuwait, in particularly, you have developmental funds. Developmental funds which take equity positions. You have developmental funds which also give out debt instruments in the form. They invest in the form of debt, but they do exist. واليوم, I think, more importantly, I think this is the first private incubator ويانا بسعود, Mr. Adnan Al Loughani, who's the CEO of Tasahil, a local incubator in Kuwait, very recently established. But the ecosystem is picking up, and then you have also angel investors also available. There's a lot of education, there's a lot of awareness that needs to be built. But inshallah, I hope and I think we are getting there. Regionally speaking, the pie is much bigger, صراحة. That's why we strongly advise our local entrepreneurs and they don't wait for Kuwait to develop. Yes, إذا إن شاء الله هالشيء كان متوفر over here, then that's great. But if it's not available, don't limit yourself to local resources. Broaden your thinking process. Broaden your horizon. Look at what's available over there. You can pretty much get whatever is available in Europe or in the States, in this part of the world as well. But there are all the different, basically, investors, if I may say, that we had over here, they're all available regionally. So look, broaden your eyes. I want to close, then I know we are short of time. In the worst market conditions that we have, all the negativity we've highlighted earlier, we've still seen startups that have become regionally, if not internationally recognized. مثل the 99. We've still seen talabat.com. We've still seen Code Positta and many other success stories. For guys, it can only get better. لا يضيقكم. Don't think it's the end of the world, whether you don't have access to funding. Well, if Faisal, I'm sure there are. We're all here to help each other and support building this ecosystem. It takes a lot of effort. But if we all focus كل واحد on his piece or her piece, then I'm sure sooner or later this ecosystem will be built.
يعطيك العافية. مشكور.
Thank you very much.
Okay, did I introduce myself actually? My name is Abdullah Al Shalaby, and I am the co-founder of Fish Fish Me.
So, and I also started this startup Kuwait back in July. So actually I have a bad news. Dr. Naif Al he had a small accident 1 hour ago, but he still said he's gonna make it, so let's hope. And the other guy in Hong Kong, actually, he just confirmed like 1 minute ago. He also, I couldn't find him until now. So hopefully everything is gonna be in schedule. Okay?
So,
While we set up, does anybody have questions for Aziz?
Well, please do. Anna, I didn't get a chance to صراحة tell you more about what I do, Abdullah. Thanks for bringing that up. Yes, I'm an employee at Global Investment House. So I've been here for the past 7 years. Worked all in all for 9 years. I work in the PE team at Global and have a lot of affinity, صراحة, or personal interest in entrepreneurs, generally speaking, to Kuwait or on regional basis. I've done maybe 5 angel investments, out of which was Talabat, and was with a managing partner for 3 years in Talabat. So we exited Talabat in late 2010. So despite having a lot of regional interest in the transaction itself, but we sold for not the highest bidder, صراحة. Then we had some arguments on how to drive the company. After that I did my MBA. وبعدين came back to Global with establishing a VC practice, a venture capital practice, for myself or a partner of mine in the process of establishing that. But we're a startup. We might fail in a few months' time, but we also might make it.
Okay, thanks a lot. Thank you.
Did you guys have any questions? What are you ready?
I'm ready. أنا ريال قاعد.
I have a
Yeah,
question.
yes.
actually.
No? Okay.
Can I ask him a
يلا.
Yeah, because he focused a lot about raising funds, but I was wondering if there are alternatives to raising funds, like crowdfunding, or doing something, a project that leads up to the startup, like Behance Network. What they did was sell action manuals or like books for creative individuals until they built themselves up. So they were the ones, they took responsibility to raise money by themselves, so they don't have any commitment or any responsibility to venture
there is
capitalists.
actually a lot of emerging ways of like raising money instead of just going like the
Because
conventional way.
VC comes with a lot of responsibility to investors. Absolutely.
Okay.
It's
It's a great point. Yeah, we need to like expand on this probably later. Let's keep to the end, then we can have time. I'm sorry. We need because the guy in Hong Kong is waiting for us. So let's just give you a brief idea about Hong Kong. So why I chose Hong Kong because actually I studied my MBA there like last year. So let me give you just a brief why I chose Hong Kong and what's going on there. And actually, yeah, so okay, this is my class in the MBA when I did this was 2011. You can see Kuwait's flag in the middle. Can I'm wearing
Okay.
in the back. So my school was actually one of the top 10 in the MBA, but they are great in finance, but not that great in engineering. I hope they don't hear this. So why I chose Hong Kong is very different than Kuwait. Yeah, there is a lot of similarities. So working in banks and on finance companies such as Abdulaziz is like the dream of all fresh graduates. Like if you want to get really a lot of money, you need to work in investment bank or like in regular banks. And also everyone there knows how to invest in stocks, such as in Kuwait. Like everyone invests in the stocks market, and as well in the real estate market. So like their mentality is such like similar to Kuwaitis. You know, it's like it's all about finance. Okay, if I want to invest, I invest in stocks. I invest in real estate, which is I don't like it that much. And also, family is very important in Hong Kong. Yeah, and this is actually a problem that sometimes, basically, like being so close to your family when you do something crazy, like starting your own business and leaving everything you like studied or everything is like it's hard to sell to your parents. Like they don't want you to do it, and like sometimes I feel like they are not that proud of you. Like, you know, it's like they don't know what you're doing when they go, okay, so what is that fellow doing now? Fish me. They're really embarrassed to say fish me. You know? So this is like okay, don't stop this. Not sure. And actually, they depend a lot on maids in Hong Kong. Yeah. Well, it's difficult to distinguish between like who, but yeah, but like they depend on me. Like another thing depends. So this is like a similarity between Kuwaitis and Hong Kong. So while we are busy in our political situations, which is okay, like it's not completely bad, Hong Kong is moving fast and they're changing. So they want to do a shift from finance to technology and focusing on startups. So actually they already started, like these are some big companies, they have 8 securities, they're doing like, you can trade stocks in your iPad, 6 ways, big game company, all of them. And what is interesting, none of them was created by a Hong Kong citizens. All of them were created by foreigners. And this is another reason why we're doing this in English. So we know, actually, foreigners, people living in Kuwait, they can do something amazing, such as Burhan. Stop laughing. Okay, so now we're gonna talk to Hoy. Hopefully everything is gonna work. So Hoy, I met him in the MBA class. He was in the class the year before me, and he was doing an app called Steply, and it's exactly similar to Instagram. And they were like the maybe major competitor to Instagram at that day because they have like Chinese, and they have 1 million users at that day. But then Instagram went high, and they actually didn't do. Yeah, like they're still doing good, but in this region only. And then now he's doing a lot of other startups such as Chopin and Mr. lately. So let's talk to Hoy.